Good evening and welcome to Money Matters. My name is Brian Kohute. I'm your host. My co-host is Richard Sichel. He's the Chief Investment Officer at Philadelphia Trust Company. Our special guest is Robin Bond, an attorney. She deals with employment law. So we have a great show tonight. And without further ado, Richard, good to see you.
Nice to see you again.
And we always caution you, this tape is timed, so don't react on anything we say. You always check with your financial advisor before you make any decisions, because this is delayed. But speaking of that, not to time the show, but we seem to be getting all-time highs in the markets.
Right.
What's going on? How do you feel about it? So.
Yeah, no, all-time highs are nice, and nobody should really be, let's say, spooked about them or anything like that. You really look at valuation, and the market is fairly valued. Which means you can be buying if you don't have the proper type of asset allocation. And these are just numbers. When you hear about it, it's a number.
Sure.
That's all it is.
Right.
And if you adjust it for all the years since it took to get back here again,
yeah, it's not all that close,
not
right?
a real all-time high. So
right. So.
There are a lot of good stocks out there.
Yeah, so that's great. So you still see stuff you guys like and
Yeah.
fair valuations.
I mean, we like U.S.-based companies. We understand their accounting better than others.
Right.
And I think there are, whether it's tech, whether it's healthcare, materials companies, energy, there are always companies that are overvalued, some that are undervalued, and we're always looking at what kind of earnings do they have, and what are we paying for those earnings. And so just because the market's at some magic number, that shouldn't stop anyone from buying or selling, depending on the individual stock, the sector that they're in, and the individual company.
That's great. You talked about U.S., which you favor, and certainly U.S. has been leading us, the last few years. What's your outlook for the developed market? I know they're having a lot of issues.
Yeah, and again, we've always seen, somebody say, hey, well, Thailand was up 100% and we're up 20%. Well, fine. I mean, I don't understand what that is. And then it might give it back the next day. So who knows? You don't want to really get involved in risk like that.
Sure.
So you stay with U.S.-based companies, and a lot of these U.S.-based companies get 50, 60, 70% of the revenues overseas. So you get that growth from Europe, from Asia, et cetera, through a Coca-Cola, Procter & Gamble, companies like that. Mm-hmm. And, you're not sort of subject to the whims of certain countries or their economies, which all of a sudden turn sour. And as I say, our economy, regardless of what they do in Washington, which gets in the way of basically everything we want to do, too much regulation, tax policy, et cetera, could be better. But this is still the best economy, and money comes this way.
There's a lot of talk, and a lot of companies doing these tax inversions where they're taking their headquarters, out of the U.S. just to save taxes. Quite honest. Does that concern you at all, or?
I mean, if a company says they're doing that, and you can understand maybe why, because we have a very high corporate tax rate, and then to bring money back in, rather than being able to bring it in and having it invested here, they're sort of penalized to do it.
Sure.
But if a company then says, well, we'll be in Bermuda, we'll be wherever for our headquarters, I mean, we're not impressed by that. We would rather have a company stay where they are, not have any accounting gimmicks, and just have real earnings. And that's what we're looking for.
You think this will get the U.S., our politicians off the dime, and they'll have to do some real tax reform?
That would be nice.
Right.
There is an election coming, and maybe after that.
Yeah.
But it is getting a lot of publicity, and that's good.
Yep.
And there are a lot of good reasons why bringing the money here would help our economy.
Sure would.
So we'll hope the politicians can settle down a little bit and come up
do
with
the right
something.
thing once and for all, right?
Right. That would be quite nice.
So I'm not sure we could have a show without talking about the Fed and interest rates, and that's I guess been dominating the news for a couple of years now of how the Fed's been keeping rates low, and we're anxiously waiting for rates to go up. What's your outlook? I mean, rates eventually will go up. We know that.
Eventually, yes. The Fed did tremendous things to get us out of the '08 disaster, get things going in '09, and rates are unbelievably low. If you're a borrower, it's the greatest thing in the world. If you're a saver, you get nothing for saving. But the Fed knows that, and they want people, to basically borrow, buy houses, buy cars. That helps the economy. It is very unfair to anybody who wants to save. So, rates will go higher, slowly but surely. And again, I don't think anyone should be sort of too concerned about that, because you know, mortgage rate right now, mortgage is maybe 3.5%, 4%. And if mortgage rates go to 5 or 6, that's still a lot less than they were for decades and decades. When they were, I mean, they got up to 20%. That was a bit extreme, but even at 7, 8%, housing has always done well. So if rates do go up to, and when they do, to 5 or 6%, that shouldn't stop housing. And so it's there should be a little less concern about the Fed saying yes, we will start to move, the rate higher. We'll pull back a little bit on throwing the money out there. Because that's based on the Fed looking at the economy and saying the economy is doing better, so we can do less. And I think a lot of investors are just saying, well, we need the Fed to do everything for us. Yeah,
it's interesting. I mean, people feel like if rates go up, the market has to go down. And to your point, it's really the Fed signal and things are getting better.
It's healthy.
And, and the economy can handle that.
It's capitalism working rather than just, the Fed with unbelievably artificially low rates. We don't have to have rates like that to grow.
Right. So that's good. I know you guys are stock pickers. Any sectors or stocks you like out there? You have your eye on?
I mean, we always like tech, and there are periods of time where tech underperforms or outperforms. But it's just a great place to be. Whether it's Apple or a company called Teradata, which is data warehousing, Qualcomm. These are companies that are innovating every day, and they're really not priced anything near like they were back in '99, the dot-com time, when they had no earnings and they were trading through the roof. These are real companies with real earnings. Intel would be one of them. Intel yields 2.6%. That's not bad.
Yeah.
So, and even Apple or Google, you can say Google's trading at such a high dollar price, but the price earnings multiple is not that high based on the future and the innovation that these companies bring to the economy. So it's a nice place to be. Healthcare for all kinds of good reasons. There are a lot of people out there who are getting older every day and need more healthcare. So we watch that area, and there are 10 different sectors of the economy: industrials, consumer, etc. And if you can do your homework, look at the economy, and sort of boil it down to where do we want to have more weighting than others, that really can help your performance, and then plug in the right stocks, hopefully.
Okay, great. You have time for a question from a viewer?
Sure.
All right, so Walter Thompson asked for Marion what are some good dividend stocks that may also have some growth as long-term investment? Right up your alley, the growth area. So.
Yeah, and I guess I threw in Intel. I mean, normally you don't talk, about yields with tech, but there's a tech stock with a nice dividend, and then there's always Verizon and AT&T, which yield anywhere from 4.5% to 5.3%. Chevron's about 3.5%. So in the old days, you had to buy a utility which could barely afford to pay that dividend, and then anything would happen in the economy, they would cut the dividend, the stock would go down also. These are companies that can well afford to pay the dividends that they're paying and well afford to increase them every year. And they're increasing them 5, 10, 15% a year. And so when you're getting zero for savings, these dividends are nice. Just keep in mind that the best stock in the world can go down as much as that dividend pays you in about 5 minutes. Long term, though, these are nice places to be as part of a portfolio.
Absolutely, that's a great point. What concerns probably you and me alike is we see people stretching for yield and getting into things they may not fully understand. Some of the master limited partnerships, some of the junk bonds, and you got some of these great stocks, as you mentioned, with a nice yield that it can go up and down, but you might feel a little safer.
Give them
those.
time. And if it gets too gimmicky or too hard to understand, you probably should back away from it.
Right. So, well, great answer. If you have a question, we'll get you a great answer like Richard gave our guest. You can just email your question to moneymatterstv@gmail.com. And as I said, we'll get you an answer from an expert like Richard. Well, now it's time to introduce our guest, Robin Bond. As I mentioned, she's an attorney for Transition Strategies, LLC. Her specialty is to get you in a better position with your job. And I know you wrote a book, if you want to show the viewers the book you wrote. And tell us a little about yourself and what you do to help people improve themselves.
Thank you. Well, I've been on both sides of the bargaining table. I've been an in-house counsel for many years, been a former prosecutor, And then after many years, I decided to take all my negotiating skills. I used to buy and sell companies in-house, and put them to work for individuals and help individual people learn how to get the best deals when they're either negotiating for new job offers or when they're exiting companies, and help them get more pay, perks, and protections and severance agreements, sort of like an agent does for a football player or a movie star. So that's what I do for executives.
What prompted you to write the book?
Well, you know, life is just a series of negotiations, and there's no getting around it. And the better you are at negotiating, the happier you are, both at work and at home. And I've seen many very successful people make big mistakes because they didn't know some secrets that would have helped them get more pay or perks or protections at work. And I thought, boy, I should, you know, help people learn some of those secrets. Hence the secret agent format of the book cover. That's why I chose that, because I thought, you know, these are like secrets.
That's an attention getter.
And I did it for the job secret agent thing. And I thought, well, you know, people don't know these secrets, but they're really smart and they go to school for many years. And I thought if I could help people, it would keep them from falling off their career tracks and make them become more successful.
Great.
So if someone digs into this book, learns maybe how to negotiate a raise, something like that, without being afraid to do it, there are also lessons in there too about everyday life. It's not just, or you know, tell us a little bit about maybe both of those things. And
thank you. That's a great point, Rich. There are lessons in there about everyday life. You know, because the essence of how do you get someone to give you what you want? And the best way to do that is to show them that there's something in it for them to give you what you're asking for. And that's what I call a whiffum factor. You know, what's in it for me factor, but the me is not you. The me is you pretend that the guy across the table from you has a little bubble over his head, and everything you're asking, he's sitting there saying, well, what's in it for me to give this to you? So you have to persuade him. And how do you persuade him? You say, well, I will create value for you, or giving you this is going to help you, because every boss has a boss. You know, and I did this with the children when they were young, and saying, well, you know, it's a good way if you really want to get mom to give you something. Maybe you start by saying something nice to mom and butter mom up and be nice, and that helps you get what you want.
So I know on the back of the book you say, you know, you show people how to ask for more money. I guess does it go into that whiffum? Like you really need to present it as if it's a win-win, or? Yes.
Well, everybody wants more money. I find out. I mean, I've worked for.
You're probably getting angry emails from employers about the book, but so.
No, actually, you know, it's interesting. That the point is I've represented well over 3,000 executives at this point in my life, and you know, the whole point of it is you go in there and you find where's the spear in the side. Every executive every employer is hiring someone because they have a problem that they need solved. They're willing to spend money to solve that problem, and it's incumbent upon us, the employee, to go in there and be sensitive to that and be aware of that. And where is the problem? What can we do to fix that? Why are we the best solution to that problem? And if we can articulate that and sell that, then and show the employer why we can do it better and faster, and we have the right experience because we've done it before. We can hit the ground running and do it more quickly with less of a ramp-up time. The employer is more willing to say, yes, that's worth paying more for. You also do your market research. You know what the market will bear. You know, and be prepared. I mean, I prepare. I have an entire chapter in this book that shows you how to get relevant market data that makes your ask a reasonable ask.
I think someone needs to have the confidence to do a negotiation with an employer. And so rather than thinking, well, what if I say this, then they won't want to hire me. This is a new hire. I mean, how do you think about that, or how does someone sort of get their mind some confidence to do that?
The confidence factor is huge. Many people are just like, oh, what if I negotiate? Will they take the job offer away from me? They're so afraid. And they say, well, you know, if you don't ask, you know the answer is no. Right?
Good point.
And I find that it's not the asking that causes you to lose a deal, but it's how you ask. If you're going to go in there with an attitude like, well, I can't accept because there are issues or there are problems or roadblocks, and you're using negative words with an attitude, well then, yeah, I think you stand to lose the offer. But if you come in there more with a respectful attitude, like, thank you, the offer looks great, I just have a few questions. Or there's a few things I'd like to clarify, or a few things we didn't get to discuss just yet.
So you don't want to put the other person on the defensive.
Right.
Yeah.
You're a rapport builder.
Right.
And then you're just trying to clarify. Well, then I always find the other side is willing to engage in a meaningful dialogue with me because I don't know so much about the other company. And I'm saying this because I, as the lawyer, am usually invisible. I am behind the scenes, ghostwriting these sort of communications for my clients in most instances, unless they're CEO level, in which case they almost always want me out front, and that's expected of CEOs. But most everyone else is, I'm ghostwriting it.
Do you find, people in a subordinate position leave a lot on the table? Do you find that they sell themselves short and really could, get themselves in a better spot?
Sometimes, yeah, sometimes. And there are a lot of factors. There are many different pots on the table that you can move all around. And sometimes somebody will take less money in the base pay if they can get more stock options. Right. Or they'll take less money if they can have a flexible working schedule. Or they want more in the base pay and they'll take less equity. Everybody moves those little pots of money all around, and what you would find you want more of, he'll want something different. Sure. So what's a good deal for one person is maybe different for everyone else, which is why I say in the book, make me a wish list. Ask every client, make me a wish list, and then we go try to get it.
Yeah.
Is there always a contract involved, or I guess typically there would be a contract?
No, not always a contract, but almost always an offer letter. And I tell people, don't worry if you don't get a contract. As long as you get an offer letter, we can always go back and ask to modify the offer letter and change an offer letter, because verbal contracts are good in Pennsylvania and New Jersey, But if we say in Pennsylvania, we have an offer letter, we can make the offer letter reflect the meeting of the minds, which is what a contract is a meeting of the minds. Right. And then if you are a higher level executive and they want you to sign a contract, then you can always modify that as well.
Yeah, so you have a few tips you mentioned that will help people get promoted or get that raise they're looking for. Could you share a couple of those?
Yeah, I'd say like 3 top tips.
Okay,
because there are a lot of tips.
Yeah.
But the number one thing if you're looking to get a raise is you've got to be able to prove your worth. The first thing is prove your worth. And that is just like you guys are numbers gurus in the business world, no matter what your area of business is, people like numbers. They don't like you to come in and say, I manage these accounts well. I want you to come in and say, I managed the ABC account to a 30% increase over last year, which resulted in $200,000 to the bottom line. Because, wow, that gets my attention. Right. Say, boy, you really did something for me. So be prepared to prove your worth. Secondly, really prepare all year long. Keep a running list of your achievements. It doesn't do you any good to pull a rabbit out of your hat if no one sees you.
Sure.
But everybody says, my boss never notices, Well, it's not necessarily his job. It's your job to keep the boss informed of what you've done. And, I always tell people, keep a running list. So at the end of the year, it's real easy to show the boss what you've done and, as I say, what it meant to the bottom line. Because it's all about the numbers. And then you can go and say, well, I'm asking for a raise, but, I've brought X 100,000 to the bottom line, so my request for a 5% raise is de minimis relative to what I've done for the company.
Right, good point.
And then finally, third point, know your market. Do the research. Boy, research is so important. Prepare. Know what the market will bear. Look at salary.com, Salary Expert, Monster.com, Career Ladders. I have a whole list of sources, and know what your position's worth, so you don't embarrass yourself, really.
Would your typical client be someone who just got that letter or the first contract, or someone who's been someplace for 5 or 10 years and says, boy, I'm underutilized or I'm not being appreciated? So then I guess that's when you get to the bottom line and sort of coach them on, here's the types of things you say. And
I have clients everywhere. Like I have people who say, I'm expecting a new offer. Can you help me coach for the calls? Or what should I expect? Or, hey, I've got the new offer. Help me take it from here to here. Or, gee, my boss hates me. I think I'm going to lose my job. What should I do? Help me position myself for severance.
Right.
Or I'm stuck in a career rut. I don't know what to do. How do I get out of this? So it's just about anything that involves the workplace where you need strategy and thinking to, position yourself financially for the best outcome.
Yeah, so a lot of people feel they get into a career rut. What's your advice to them? Do you think they should try to work through the opportunity that's in front of them, or sometimes you just raise the flag and have to move on?
Yeah, well, it depends. I mean, education can help you, but you have to really think about that today. If you're going to invest $100,000 in an MBA, $100,000 a year if you go to Penn, right? I think education to get you to the next level is important if it's going to get you the credentials you need to get the higher level jobs, or if it's going to give you new marketable skills. I think that's important. But before you say, oh, I'm quitting my job and going to go take out $200,000 in student loans, you ought to consider maybe what programs does your company have that are developmental, like maybe a project management institute certification might be very helpful, or even a Six Sigma certification. Those are very expensive. If the company don't pay for it, that's great.
Yeah, right.
Right. Or all the the financial certifications you guys have, that could be very career enhancing for someone that doesn't have a Series 7 or 63 or insurance certification. And then, like you say, what if you're going to raise the flag and say, I just have to get out of this job? Sometimes I negotiate for the company to pay for those programs as part of the severance package.
Okay.
That's good too.
So as you're leaving, you're not hopeless. You say, okay, I'm leaving, but at least I'm going to have something to get me started on my next step.
Is your phone ringing off the hook thanks to this book?
Thank you. Well, I like to think that I get a lot of speaking engagements, which is really helpful because part of the mission of the book is to help people who really to keep them from making big mistakes. It's just really part of my own mission is to help people stay on track and succeed. I really want to see people do that.
Do most workers know there's people like you out there, that there is someone that could help them, or
not necessarily?
Yeah.
That's and many times people say, God, where were you when I needed you? Or I wish I had known about you then. So I appreciate the opportunity to come and
so you're really doing the whole thing. It's not like, here's the contract the employer offered me, make some changes on it for me. I mean, you're really digging in deeper and counseling and not just saying how I'll change this and this. And so you're really, sitting down and spending time with the people.
Yes.
Now,
there are subtle changes you can make that make a huge, powerful difference, even so much as changing your voice, changing your presentation, changing how you present, telling people where to sit when they go into the meeting, how their body language. They're very powerful changes you can make that make a big difference. So I'm sure you're aware of that in your line of work.
So we hear. So I mean, most people think of a traditional headhunter as someone that's you go on these interviews, good luck, don't really help you. But you obviously do much more than that. So how do you get compensated? Do you?
Oh yeah, I'm not a headhunter. I'm a
No,
lawyer.
I know that.
Right,
Yes,
so
no, I didn't mean to imply you were.
Yeah, well,
yes. So
nothing wrong with headhunters. They're can be great for people. No, I get paid by my clients, and hopefully I can get legal fees paid as part of the deals.
Okay.
We always try to do that if possible.
Do you have a situation where the employer brings you in on their side, or typically not? No. You're usually on the other side of that.
On the other side.
Oh yeah, I was going to ask. So you're always the employee representative.
Yeah, no, I do represent a few small employers, but the bulk of my work is representing individual executives in the negotiation of their employment and severance deals.
How'd you get Mark Cuban to write a forward?
Emailed him. Yeah.
Really?
Was that easy, huh?
Yeah.
Wow.
No, it wasn't that easy. I knew Mark from college.
Oh.
We went to college together, and he used to actually drive me to and from
Is that right?
college. Yeah, we both lived in Pittsburgh and grew up in Pittsburgh together.
Okay.
So, And he was an intense guy who was going to go places way back then. So
That's great. Well, he did, right?
Yes, he did. Yeah.
He did pretty well for himself.
One of the most successful men in the world.
I know you mentioned, off camera about the Ray Rice thing. Should people be mindful what they do outside of job? I mean, everything's kind of on Facebook and Twitter, and does that potentially come back and haunt people?
Today,
more than ever, right?
It is an electronic world. I think you have to presume that almost everything you do is being monitored, videoed, recorded, everywhere, even in the workplace, which is, there are laws about what certain areas that can be videoed or monitored. But I do caution employees about this, and it's a great question to ask now. When you are in the workplace, and if you use a work phone, it may be monitored. Right. People may be listening in on your work line. If you are sending personal communications from a work email, the employer has the right to review those communications. So it's not personal, it's not private, it's not confidential. So get yourself a personal email and send your personal emails from a personal email address. Do not use the company email as your personal email address, because it can and will be monitored. And there could be cameras in your workplace monitoring you. So, the right to privacy does not exist as we think it does.
Right.
Certainly not in the workplace. And anymore, what we do off duty is creeping more and more, into affecting whether or not we keep or lose our jobs.
That's good advice. So there really should be no expectation of privacy when
in the workplace. I think that's a really safe rule to operate by. Just start operating from the rule that there is no expectation of privacy in the workplace, and then all the legal nuances can come in later. But if you, as an employee, say just presume there is none, you'll be a lot safer. In terms of protecting yourself from getting fired.
So, we only have a few minutes left. Is there anything you want to share that we didn't touch on that you think should, some information you want to depart on our viewers?
Some words of
words of wisdom. Yeah,
not some.
They're all going to storm into their boss tomorrow and say, "I want a raise."
Well, that would not be the approach. Okay. That would not be what
exactly
I said.
it. Call you first.
Well, this is an era where you can't count on your employer to give you future employability. So I would just caution all the viewers that, you're in charge of your own future employability. And we all really need to be very mindful of that. And, constantly keep your skills refreshed, constantly be mindful of your appearance, constantly be networking and keeping your network refreshed and in touch with people. Remain indispensable at work. Be mindful of keeping good relationships with your coworkers. Remain tech savvy. These are all things that you do that control your own destiny, and I think we all have to be mindful of that and very aware that we are in charge of our own destiny today.
Okay, well, that's great advice, and I think unfortunately we have to stop there, but Robin, has been extremely valuable information you shared.
Thank you.
Please join us for our next week. For our next guest is Heidi Grunwald. Heidi's a PhD for Legal Science Partners. They do research in case law, so it'll be another exciting show. Please tune in because your money matters. Thank you.
Well done.
Well done. Okay, great. Thanks, you guys, for great questions.
Sure. Yeah, forward by me, yes.